So right now you do have this ETF like craze, right? So we have the futures ETF that's going to debut, and that's creating so much hype in the retail sector that it has driven Bitcoin tremendously higher. My fear is that you're starting to set up some sort of, sell the news event. In fact, when we saw the futures initially debut on Bitcoin, that actually was a sell the news event. And I do wonder if the institutions and the big money is kind of setting up the investor for this downdraft. And if you look at past cycles in Bitcoin, and this is what the big disagreement is the cycle we're in, has the top been at 65K, or is this just a stepping stone to a much higher cycle top? We don't know that as a technical trader until we take out 65,000. So that's really what I'm watching, and we are close now. I mean, we probably will know in the next week. It's interesting, it's going to coincide with the Bitcoin ETF.
I do want to follow up on the technicals in just a minute, but let's talk about this ETF and this hype. I don't understand this hype. Help me out. If you want to buy Bitcoin, you already can buy Bitcoin. So who is this going to affect, really? I mean, the ETF, we're going to see obviously an inflow of capital, but where is that inflow coming from, or going to come from?
Well, the hope is that it's more from the retail investor, not necessarily the young investors that are already on Coinbase and stuff, but I'm thinking more like, you have a 60-year-olds who would never normally open up a Coinbase account or a Kraken account. The hope is that they're going to say, okay, it's now an ETF, I can now invest in Bitcoin.
Okay, but let's walk through the practicality of this hype. So if you're a 60-year-old, 65-year-old retiree, and you haven't invested in Bitcoin already, you're saying this ETF is going to make the entire difference? That's the tipping point for people who are skeptical about buying Bitcoin? Does that really make sense to you?
It doesn't make sense to me, but that is what the narrative is. And you have to be careful with narratives. And I want people to understand this. When you had all the kind of the Reddit crowd, the Wall Street Bets crowds, initially that was based off the small investor. I do worry that the institutions and hedge funds have gotten involved and have spun narratives to try to get the price to go up. And I do worry that that's what happened. That's what has happened here over the last 3 weeks or so. That the institutions are hyping this as a change. They're getting on these boards under super secret screen names, and they're pumping this type of thing.
So would you use the word overhyped to describe this phenomenon, this ETF craze that we're seeing right now?
I would, and I would also caution investors to understand that future ETFs based on futures always go to zero over the long term. So be really careful.
What goes to zero?
So the way a futures ETF is done is that it's based on future contracts. Right? There's a contract rollover with Bitcoin, and let's just say you have a $10 price. And if the rollover future contango signals that you have higher prices on future months out. So if you have to roll over those contracts, you might sell at 10 the current month and buy at 11 for the future month, the next month. Overall, you're losing a percentage every time you roll over. Eventually, that investor is going to lose. It's just going to drive Bitcoin down, even if Bitcoin doesn't necessarily go down.
But you made the case for 65,000. That's the key level for you. Once it hits 65, would you change your mind? Would you say, okay, this is the critical support or resistance level rather that has already been breached? Now it looks like bullish momentum is here. I should start getting long. Would you make that argument?
So the way a trader would trade this is if it breaches 65,000, it no longer can be compared to past cycles, and you have to assume there is further upside. As a trader, I would never chase something that's gone straight from 40 to 65,000. What I would do though is then instead of waiting for it to go to 18 to 20, I would buy on pullbacks at that point. So let's say it breaches 65 and confirms. Let's say it pulls back to 50 or 40, then I buy instead of waiting for 18 to 20. Absolutely.
I'm impressed by how disciplined you are. I mean, 60 to 65K is not that big of a difference. One might just say, well, why don't you just carry that assumption over to current levels?
Well, so the 65,000 level is really the big kahuna, right? I mean, that's the previous cycle. That's the cycle high from April. That's what means in a technical trading perspective. That's everything. If it can't breach that, then you still have lower highs in the chart.
So you're suggesting that the retail investors are going to be affected more than the institutional investors by the ETFs. Is it going to be easier for a retail investor to purchase a Bitcoin ETF versus starting a wallet and accumulating Bitcoins using just traditional methods?
I do think so, just because it's less scary. So you still have a lot of investors out there that are very skeptical on opening a crypto account. We always hear about people getting, their funds stolen from cryptocurrency accounts. If you can now purchase it in your investment portfolio, I think that gives a lot of people that were hesitant the reason or an incentive to buy Bitcoin, the Bitcoin ETF.
And transaction fees, would there be a difference between transaction fees in the Bitcoin ETFs versus just regular Bitcoin?
Well, I assume, so I'm not sure what they'll charge in terms of the ETF fees, but I would assume that you would pay basically your fee on a stock trade, your commission. So, you know, you go to Coinbase, you can pay like hundreds of dollars for a buy and a sell in terms of a commission. You might only pay $5 or even free to some people for the ETF. So that'll be interesting too.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Let's move on to your presentation at this conference that you'll be making later. And the theme is the demise of the Federal Reserve. Right. Pretty strong words. What do you mean by that?
It is. It's something that the media hasn't caught on to yet, but it is the chain reaction of what is going on right now will lead to this. And basically, I'll be talking about how, you know, the debt that the government is taking on, coupled with the Federal Reserve's balance sheet that keeps ballooning, coupled with interest rates that they just want to keep lower, will eventually create a situation, a collapse in the system, where you will no longer see the Fed in its current form. It'll be kind of abolished, if you will. And that's going to happen strictly because the people will demand it. And they're going to go over it. It relates to cryptocurrency because eventually you're going to see a switch over to this kind of blockchain, crypto, digital currencies that will eventually be the future. So the chain of events started actually in 1977 with the dual mandate. So as soon as the Fed got put in the position of having to monitor unemployment plus inflation, that was the beginning of the end for the Federal Reserve. The reason it was is because basically, if you want to keep unemployment low at all times, which is what the Fed wants to do, you have to constantly stimulate the economy, right? By printing money and keeping interest rates low. Well, you can't be the parent that spoils the child and then also be the one that's hard-nosed and says, well, we're going to raise interest rates because inflation's getting out of control. You can't do that. And that was the beginning of the chain reaction that I'll talk about in the presentation. After the collapse, you'll see a new body come up that'll be in charge of the digital currency, whatever it may be, and eventually you'll see this digital currency probably being used all over the world, even as the reserve currency.
What options do they have now?
Oh man, I mean, taking away the dual mandate. I mean, so I've always been a big believer.
Which, by the way, is unique to only a few central banks. I believe the Federal Reserve being one of them. The ECB only has one mandate.
Right. Yeah, that's very, very true. But I think the bottom line is that you'll see something emerge that'll be a body that monitors the digital currency, but it'll be strict in terms of its expansion, right? And I also think that the people will demand that the government eventually has a balanced budget and that can't just run endless debt up. And this crazy, you know, monetary theory, as they call it, you know, it's just this concept that the government is now run by, that you can just print unlimited amounts because there's no repercussions, and that is absolutely not the case. I mean, even someone who runs their own household can tell you that eventually that check is going to run out.
So to your point that the Federal Reserve is going to be abolished, I'm just making the argument that would be a difficult thing to do because there are certain powerful actors within the government who probably wouldn't want the Federal Reserve or any monetary body to just disappear, at least not in its current form.
Yes, but what I'm actually calling for is a total collapse of the monetary system, actually. Wow, okay. So it's not, I mean, there will have to be a reset, and I do think that what we're going to go through as a country, as a world, is something that's going to equal, if not be worse than 1929 and the 30s of the Great Depression. It is going to be cataclysmic, but from its dust, Bitcoin and cryptocurrencies will rise and be the future of society.
What's going to be the trigger for this collapse?
Oh man, I mean, I think the triggers have already been put in place with just the printing of endless money. I mean, think about how everyone's now saying the U.S. could just, you know, how do we pay off, you know, almost 30 trillion in debt? Print more money, you know, keep interest rates low. We know that every time there's a crisis in the world, whether it's COVID, whether it's a recession, what does the Fed do? Pumps more money, more QE. I mean, think about after 2009, the Fed came in with quantitative easing. You thought that was going to end after a few years. It didn't. And now we have COVID, and it's even more. And now the Fed's talking about it again. Watch, you'll see some sort of new crisis emerge, and the Fed will cut back on the QE a little bit and then re-up it as soon as the markets start to throw a hissy fit.
But why would that cause the monetary system to collapse?
Well, because eventually you have so many dollars out there that you're going to eventually have yields on the bonds spike higher regardless of the Fed, and you're going to have some sort of system that just is doomed to collapse. And it's hard to denote the exact chain reaction or specifics, but you can just see the writing on the wall at this point. It is not a pretty situation.
So what is this collapsed monetary system going to look like in its final form?
I think the dollar is going to eventually collapse. I think a lot of the main currencies of the world will decline. I think inflation is going to not go down back to 2%. You're going to see inflation run hot for at least a decade going into this. And eventually you're going to have the people just rising up, not necessarily in a violent way, but just demanding some sort of change, that you can't just constantly print money, that you can't just run up debt endlessly, because eventually that just eats away at our own buying power.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members, where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active, and see you on the other side.